Good morning, Jags. This is Fahad. Today is Tuesday, September 15th. Let's get started. I want to start off with DraftKings again. We had a beautiful day in this stock yesterday with a powerful high volume breakout, and we roll our call options, and I'm still anticipating significant upside over weeks and months to come in this name. But I want to give you some more added color because the ESPN news, the deal that the company signed yesterday, is significant in nature. So I want to talk about that a little bit, plus also what we're seeing on the gaming side. And this will potentially help improve the confidence around this stock even more. Number one thing you need to know is that the ESPN's parent company, Disney, actually owns 5% of DraftKings. I don't know if many people are actually aware of that, but Disney owns 5% of DraftKings. So this relationship actually goes back to the equity stake that the company has. According to similarweb.com, ESPN.com gets about 400 million views per month. And that was the rate in the month of August as well. Two of the top 5 sports, according to Sensor Tower data, are ESPN apps that people download on their phones. And the deal actually involves Caesars Casino in order to build out the whole sports betting platform around it, because every operator is basically cutting deals with a regional or a national scale casino operator in order to get into the jurisdiction limits and and to be able to basically get into sports betting. Want to give you some color on what we're seeing aside from the ESPN news about what we saw in the month of August. Take a look at this chart. This is New Jersey sports betting handle on the top left hand side, and the New Jersey iGaming on the top right hand side, and then Iowa, and then Indiana. Here's what you need to keep in mind. As the sports return, we are clearly seeing a major pent-up demand that we were not anticipating previously. The statistics are literally off the chart. In the month of August alone, New Jersey posted a new all-time high for iGaming GGR, reaching at 87.8 million in a single month, up 113% year over year. New Jersey iGaming GGR has been up 100% every single month since April. And 2020 year to date, GGR already up 24% higher than entire year 2019. That's just in the state of New Jersey. Online sports betting handle reached a new all-time high as well for the entire country, reaching $602 million, 23% above the previous record that was set in December of 2019. An overall sports betting handle of 668 million in New Jersey is the highest figure ever reported in a U.S. state, including Nevada. So New Jersey actually is now doing more online sports betting than actually the state of Nevada. In Indiana, August GGR was up 47% month over month, while handle was 138% increase. In Iowa, online GGR was up 23% month over month, while handle was up 97% overall. You can just see how significant this particular story is. Can you guys, by the way, mute one of you? Can you mute one of your mics? Anyway, so now keep in mind this one thing. We talk a lot about New Jersey because this thing has been actually around for the whole year. So we have far more progress to see in New Jersey because it stands out compared to the rest of the states. But I do want to point out that what was not in the picture previously, but will start to become significantly important as we get into the fall months, September, October, November, and such, is the impact that we have yet to feel in the total numbers from the state of Illinois and the state of Colorado. Both of these came online in the past 2 to 3 months. So they are now at the juncture where New Jersey was more than a year ago. So I expect sharp accelerating trends in both of those states as well. We may be at a time with the NFL coming back, we may actually start to see by the end of the year numbers that will be way beyond any street expectations for the entire iGaming as well as the sports betting. So these charts are literally off, 100% increase every single month, and it just shows you how strong the pent-up demand is. Now, with that said, a couple other things to keep in mind. PENN National Gaming. As you all know, this company is trying to has a partnership with Dave Portnoy of Barstool. There's a soft launch coming for their app for sports betting, and that is actually on September 19th. I'm gonna make sure that I have the date correct, but either it is on September 18 or September 19, basically this coming weekend. I don't exactly know what soft launch for PENN National Gaming means. Is it just in basically a beta version that will be released in key states and not all states? Is it going to have only limited games available to bet on online? I have not even seen PENN National Gaming app yet on my phone. Maybe it's worth downloading and checking it out. But that launch is expected this weekend. So I don't see the stock pulling back at all, despite the fact that this has been running strong and this RSI may seem a little bit overbought. MACD continues to stay resiliently strong and the volume remains high. I know our favorite is DraftKings, but I don't see PENN National Gaming pulling back at all. I think it's going to continue to push higher gradually throughout the entire week, and possibly we'll see some positive feedback next week as well. So I think this thing is going to go even higher from here. It's not done yet. So that's PENN National Gaming. And lastly, Williams Hill, WIMHY. This is an ADR that is traded in the United States. So the symbol is WIMHY. Williams Hill, that's the third operator. The company has a deal and has several key milestones that they're in the pursuit of for this for the growth vertical, which is the iCasino and the iGaming machine. This had a huge breakout on very, very heavy volume yesterday as well. This is an $11 stock, does not have options. Like I said, it's an ADR, but I think this will also continue to the path of gradually going higher. So I think this entire space will remain hot as we are now in the NFL week 2, and there's so many more weeks to come given the pent-up demand that's in front of us. Tuesday, sorry. So now I know. I was just looking on my other charts. The soft launch for PENN National Gaming is on Tuesday. And that's Tuesday, actually today. Today, I was wrong about that. It's today. And then the full launch is actually on September 18th, which is this Friday. That's PENN National Gaming. So keep an eye on that. All right. Now, with that said, I do want to just quickly touch base on purely technical side, the lodging business. Keep an eye on all of these charts. This is the Marriott that you're looking in front of you. Marriott had a beautiful rally yesterday, and this thing wants to break out through all of this congestion level. There's a tight bull flag that is forming in Marriott that's around $107 per share. I expect this stock to break out through that. Very resilient performance yesterday, even though the market was generally led by the leaders, but I noticed that lodging continues to be a very, very strong spot for everybody. Similarly, Hilton. If you go to Hilton, look at this. Hilton has a beautiful power candle yesterday, high volume push higher. It's trying to attack $94 resistance. This is the major key VOP resistance. I expect the stock to clear that and make a run. There's a big air pocket. This will get into the air pocket and will make a run up to $108 per share. To show you real quick what some of these charts look like on a stock chart, just because it gives a much better version. Here is Hilton. So take a look at this. Here is the key resistance in Hilton. Look for this to clear. Look for this to clear this $92 to $93 VOP resistance, and after that it's clear skies above that, because I don't see major VOP resistance in this name all the way up to about $110 per share. Hyatt, similarly, very nice bull flag formation. Look at the tight consolidation, and Hyatt is attacking $60 resistance here. Big power candle yesterday. Look for this to clear through that. And then lastly, the name that we have not discussed is IHG, which is Intercontinental Group, which is a UK-based hotel chain. This has pulled back and is starting to take a next leg higher. Bank of America is recognizing the trajectory of improvement in the entire lodging sector. So this morning, they're increasing the price target for Intercontinental Hotel for the same dynamics that we have basically provided previously. As a reminder, if you go to my podcast on August 24th, I talked about in this 10-12 minute podcast, the travel and leisure stocks are ready to rally. That was when Marriott was trading in 97 and 98. Now it's at 95, and I still think that the entire group has more to run. So Nice technical setups in the entire group, with Bank of America endorsing the bull case and raising price targets in IAG. Look for continued rally in this group. That's it from me. Jay?
Morning, Fahad. So wanted to provide some updates on two stocks today. The first one is Generac. So if we go back to August, B of A was out with a note at that time highlighting that we still have another few months to go of hurricane season, and then we have wildfire season on the West Coast. Meanwhile, their clean energy business is likely to reaccelerate in Q3. Now, fast forward to today, they're out with a new note after some management meetings, and how Generac highlighted how they, within their clean energy business, they are already coming out with a wave of new and improved offerings in the upcoming weeks, and how they are already gaining traction within this business. They even noted that they will be rolling out to a major retailer program in Q1 of 2021. While its national partner is Sonova, it did show a long list of regional and local distributors in its slide deck. So keep an eye on the clean energy business going forward. And then for their home standby business, which most people are aware of, the demand, of course, there was demand due to the usual spike from all of the August weather events. You do have Hurricane Sally on the horizon now as well. Now, they did say the home standby upside in 2020 is contained to some extent by capacity, but that is leading to a surging backlog in what is normally a seasonally weaker first half 2021. Technically, stock did pull back at the beginning of the month, but has since kind of slowly grinded higher. So I would look for this to definitely go back to 52-week highs in the near term.
Good stuff. I like this name. We have been bullish on this for quite some time. It was also mentioned multiple times in quarterly outlook. Great, and a great looking chart too.
Mm-hmm. And the second stock is another former key debate, Workiva. WK is the ticker on that. This is a software as a service company. When we wrote about it in the Q4 2019 key debate section, the bull case surrounded a European mandate known as the European Single Electronic Format Conformity. And under this mandate, all listed companies will need to finalize their financial reporting and using up-to-date digitalized business reporting systems. And this is where Workiva would fit in. Now, yesterday, after the close, Workiva announced that two agencies within the Department of Justice selected the company's platform. That would be the Justice Management Division and the Bureau of Alcohol, Tobacco, Firearms, and Explosives. Now, Workiva is FedRAMP authorized, and ultimately what these wins offer is just a proof point that Workiva has the potential to move into new verticals with different use cases beyond just SEC financial reporting. And another reason why I wanted to bring this up was when you look at the chart, you've seen pullbacks recently, but they've come back down to around the 52, 53 support level. So this could act as a good swing long entry from here.
Yeah, interesting update on this one. This is yet another one from our quarterly outlook. I know many clients have gone in and out on this one, and consolidation continues. This has been a major VOP resistance around 56, 57. So, 3 months of sideways consolidation. Earnings also didn't really do much for it, but the update is an interesting one. And I remember the last time when we covered this in chat room as well, when the earnings came out, it seemed like a pretty good stock, pretty good solid earnings report, but muted reaction to the stock price. And prior to that over here as well. This is what I call something basically that goes up a lot and then goes sideways, basically builds an energy before you see another spark and a high volume burst in the stock. And I think we're still waiting for that moment in Workiva, purely technically speaking. So in my case, I would wait for a clear technical breakout through 56.50, and I would like to see some power volume behind this before I would make an entry, because from there, just using the Fibonacci extensions from here, my price target will probably go all the way to $65 to $70 per share over the course of a couple months. But I would wait for a technical breakout. But thanks for the update. Interesting one. Chronicle.
Morning. So I have an idea that I'm planning to present for the quarterly outlook. The stock had a breakout yesterday, so just bringing it to our attention today. Company is called Vertiv, symbol VRT, and they specialize in providing all sorts of maintenance and monitoring services for data centers globally. So while a traditional data center takes 18 to 24 months to complete solutions deployment, Vertiv can typically deliver a prefabricated modular or PFM solution within the space of 4 to 6 months. Segment-wise, data centers are like 70% of their revenue, while 5G communications make up most of the remainder. America is about 50% of revenue, Asia Pacific is 30%, and Europe is 20%. And the theme here is increased fiscal spending on new communications infrastructure, especially outside of the US, as we can see from the figure below in the image that I shared. This company is quietly the global industry leader in several categories with room for growth. But in the case of Vertiv, the bull case is not just growth, but there is also strong margin improvement and a debt reduction story going on. So let's talk about the growth first. The company has been announcing lots of new partnerships across Asia lately. For example, they announced a partnership with VST ECS in Thailand to build out the country's 5G and edge infrastructure solutions. This made a lot of sense because the company already has a massive PFM data center factory in Thailand. So this partner, VST ECS, they're a leading IT distributor in Asia Pacific with a network of 35,000 dealers across the region. And this image on the top right shows all of their major clients, which Vertiv will have access to in this region. Separately, Vertiv also has announced partnerships in Malaysia and Vietnam, which is quite an achievement given that these countries typically have high barriers. And the Vietnam partnership with Viettel, which is the nation's largest mobile operator, that partnership should see swift returns because of Vietnam's ongoing 5G trial launches in the enterprise sector, and we can expect full license issuances in 2021. Moving over to Europe, Vertiv is currently seeing accelerated new orders from hospitals, telehealth, health workstations as a result of increased data volumes. And in North America, about 20% of Vertiv's total revenue is generated from telcos, with 349,000 base stations in the US alone. One of the main problems with 5G is in power management, where base stations are experiencing a 150 to 300% increase in energy costs versus 4G, and Vertiv offers a wide range efficiency product for indirect cooling and DC conversion for base stations as well. So that's the growth component. Now let's look at the debt reduction and margin improvement. I think the most crucial part of the bull case is the company's merger with Goldman Sachs acquisition this year, which resulted in a $1 billion reduction in gross debt and refinancing at lower interest rates, as well as a series of permanent cost reductions of roughly $50 to $70 million. On the margin side, management has singled out a further 1,500 basis points of potential margin opportunity going forward. Basically, a lot of the company's significant investments in its global IT infrastructure are now complete, and Vertiv is now looking to do R&D on higher margin products. The company also set up a global procurement office in mid-2019, and they've begun using online auctions this year. And so, given the scale of purchasing, the CFO believes that even a modest improvement will see tangible returns. Not a widely covered stock, only Bank of America has been out with a note recently, and they have a $20 price target.
Yeah, interesting one to bring for the quarterly outlook, considering that it's in the cross currents between naturally rising data usage in the cloud space because of COVID that has accelerated everything, and then also the IT environment, seeing rising capex environment as the business shutdown conditions for 3 to 4 months, basically resulted in gaps that are now trying to be addressed by companies. So, initially when the year started, a lot of IT budgets had been strong, but then they were cut materially, in some cases 50-60%, and now they are going right back with significant increase in capex. So that plays in favor for the company like this, and all the expansion opportunities internationally that you also mentioned. And this is a fabulous technical setup, I have to say. I want to go back and take a look at this last earnings report as well, which is always nice to sort of build confidence as to what the company said, what the management said. But looking at this chart, when the company reported earnings, and it had a nice, powerful, breakout, multiple gaps, multiple times it pulled back and filled that gap, double bottom as well, and now starting to break out from consolidation. So fabulous looking technical picture here, and a good update on this one. Looking forward to your full write-up on this one for the quarterly outlook, considering the opportunity. And looking at the valuations too, this is not an expensive stock either. At 3 times sales, I have to compare this to what the peers look like, but interesting stuff. Avo.
Good morning, everyone. Just a couple of quick ones this morning based on some interesting options activity that I've seen. The first one is Masonite, DOOR, so DOOR is the ticker. Now this one on Friday had a buyer in October 100 calls. Unusual, as it doesn't typically see much activity, and those are reflected in open interest there. Yeah, those 500 contracts, I think they were about $1.60 a piece. And yesterday there was a bullish opening put seller in JELD, J-E-L-D. Went out to April and sold 1,525 puts for 15 times $6.20. So that's nearly $1 million, if not over. Interesting. Now both companies have already reported, and though I can't say that they did stellar quarters, they really did better than expected with the improving picture in construction going on in the US, especially the housing market. And we have data coming out on Thursday as well for August.
Basically, this is another housing theme, and so very impressive charts, I have to say, right? So this is JELD, this is right here, and this is the very beautiful breakout. MACD RSI bull crosses are also in front of us. So this one is basically breaking out from bull flag, and the next one was Masonite, DO, and a nice looking bull flag here as well. See if it starts to clear. It may actually do that today. So that's another one to keep in mind. Yeah, nice looking charts. Good.
And they both benefited from some pricing improvement as well, and like they're global companies, right? And it's a very fragmented market, so they are still looking to do more acquisitions. They are looking for towards the future. They're not just stuck in today, but mostly I think they are benefiting from the U.S. construction market or housing market. And I wouldn't discount so much the hurricane activity recently, boosting a little bit of increased sales, and especially in the window category. That's all I have for you.
Yeah, fantastic update. I like these charts, and we identify these kind of setups, and then what happens is that whenever you get some days when you get significant rotation from growth to value, which was the case yesterday as well, by the way, where Russell 2000 index yesterday was up 3% in a single session. And I'm looking at this morning, and I think we may have one of those days again. So that's when these stocks can really power higher, whenever you get those days of over outperformance of Russell 2000 over the growth stocks. So yeah, great update. We'll be keeping an eye on this one to make any kind of plays. By the way, folks, Cracker Barrel just reported earnings. I haven't had a chance to take a look at it at all, but let's see how this stock performs. Remember, we have a tremendous amount of leap call accumulation out of money in CBRL. Let's see how it reports earnings. Like I said, I haven't had a chance to look at the earnings, but a tight bull flag we identified couple times talked about this. See if it breaks out from this. All right, that's it from us. See you in the chat room shortly.